Hi everybody and welcome to the PlantStock channel. If we haven't met yet, my name is Jesse. And today I thought we would do something different. I want to test something different when it comes to the different plant-based stocks, especially the ones that we talk most about on this channel, which is Beyond Meat, Tattoo Chef, the Very Good Food Company, and every now and then Oatly. For quite some time now, I've been thinking about that it would be interesting to do a weekly best performer in the sense of a stock price, right? Or maybe monthly comparison. But right now, I thought it would be interesting to do the best performer in stock price for 2021. So year to date then, right? I might do one for the whole of 2021 when we're reaching the end of the year, but I couldn't wait. So let's give this a try. All right, but before we do that, I would, as always, appreciate an early thumbs up to help spread the video to more people out there. And if you're not part of the channel and you are interested in these plant-based companies and maybe some other plant-based companies, make sure to subscribe and don't forget that bell button. And if you want to be part of our free, great Discord channel, take a look down in the description. Thank you, folks. I truly appreciate your help. So I thought it would make sense to begin with the industry leader, our own Beyond Meat, ticker symbol BYND. And this is on Sunday, right? So it ended at $85.15, went up about 4% now on Friday before closing. Now, if we just quickly look at the 52-week range, well, it wasn't long ago, just a few days ago, it was actually down to $76 and at its maximum $221. Let's just take a look at it here. And this is basically what we have then again, year to date. It started in the beginning of January around here, $125, and then it quite quickly flew up to about $221 at its maximum, right? It went up 40% in a short amount of time, and actually just a few minutes. And that's when they got the PepsiCo deal. And as we know, with Beyond Meat, it has been an absolute roller coaster, right? And it has dropped like crazy. And as I said before, down to $76, but right now trading at $85. So we know, like after the PepsiCo deal, there's been a lot of situations. They've had a lot of issues with first their Q1 in March, April, when we found out that they hadn't sold as much as we had hoped for. Then it just flew down again. Then we got some positive information regarding that they got the chicken tenders and it got upgraded again by different analysts and then downgraded again when we found out that even though they did really well in their Q2, better actually than they had ever done in many ways, they still had really bleak outlook for the upcoming Q3 results, right? And as we got closer, it started to balance out again to some extent. And then we found out about a month ago that they knew that they would probably do really badly now in Q3, worse than they thought, about $106. And we know that we found out that they actually did. And then why it actually stumbled down even more, the reason was, as we know, because that now they seem to have an even bleaker outlook when it comes to Q4, where they expect to only have about 85 million to 110 million in revenue for Q4, right? So that is one of the reasons that it's reacted this badly. And I just want to warn you guys, there's a reason, there's a risk that it could actually go down even more again because it has gotten some momentum again, right? It's trading now at $85 from $76 at its lowest point. But I do expect that we might see even more downgrades from different analysts, and that might push it down again. So just something to keep in mind. So if you are interested in investing in this company, think about dollar cost averaging, right? But if we look at the whole year for Beyond Meat, we can see that it's down about 32%, right? Year to date. But then we have Oatly, one of the other giants in this sector. We know it didn't actually IPO until around May, right? And when it IPO'd, we know it was people were really hoping for a lot of great things here. And it jumped up to $22 from $17. We know The reason for that it was actually supposed to be at $17, but we, the normal people, couldn't invest in it already then. But eventually went up to $22, and then a couple of weeks to a month or so, it went up to about $28, $29, almost actually up to $30. And obviously Oatly was extremely overvalued at that point. And then when we got closer to summer, Spruce Point, the hedge fund that was interested in actually shorting this stock, came out with a bunch of information regarding the company, that they're not trustworthy, they have wrong numbers, and they're not as sustainable as they've said. Well, since then, and then we've had a lot of different lawsuits from a lot of different law firms. I don't know, hundreds and hundreds of law firms that have been stating that if you want to actually make a case against Oatly, then you should contact them. And obviously that has had a negative impact on the stock. Even though it was very overvalued, I think that is one of the bigger reasons why it's gone down as much as it did initially. But then, as with everything, we have inflation that's up to about 5.1, 5.2. That has hit growth companies and disruptive companies really much. And then we have shipping costs. Obviously, that's part of it. And the insecurities with the Fed, which has obviously also impacted all of these stocks that we're going to talk about. So it's been a downhill from here, a downtrend, right? And if we look at year to date here, or 52-week range, well, it's not actually 52 weeks here, it's since May, but we can see that Oatly, now it's about 1182, right? At its lowest, it was at 1113, and at its highest point, $29, right? Again, if we compare it here, we can see that it's down about 50%, right? So it's probably not going to be the best performer this year, right? Then we have Tattoo Shift, ticker symbol TTCF, which is all-time favorite often on this channel. We can see right now it's trading at $16, went down about another 4% on Friday before closing. And the 52-week range here, well, it's almost like it's been standing still to some extent. It's at its lowest point around $14, right? And at its highest, about $27 to $28. Now, this is actually, to be fair, before the beginning of this year, right? It was actually last year, about a year ago. So, but it's still interesting to compare. Now, if we then take a look at and compare it to the other two companies, we have it here in yellow. So it started out the year pretty good, around $23, then eventually went up to around $26, almost $27. And then it's been, like we know, this has been an extremely volatile stock, just like Beyond Meat. There's a lot of shorts here, like 30 to 40% shorts. People like to make money on this, right? And we've been seeing it trading down to all the way to $16 when we're here in April. Then it's gone up again. And I think here, one of the reasons back here in April and May, as you know, there came out some information regarding that the company CEO might have done some shady business, right? It was also when the CFO actually lost, Cargill actually lost his job, or we still haven't gotten a 100% answer to that, if it was that his contract was over. But yeah, he stopped working for the company, and then at the same time, we found out some information that the CEO had granted and gifted quite a lot of stocks to different individuals that have had some form of work and some kind of advice for the company. But yeah, we didn't get enough information, and a lot of people, whether it was shady or not, but a lot of people felt that it was shady. So it was a tough and volatile time during this. So it was down to around $16 up and down. And then we got more and more information that the company is doing better. They're acquiring companies. We know the New Mexico facilities here in May, June, right? That really took up the company again to certain levels, around $23. And then the shorts took over again. And it's been a wild ride here, right? adding their products to more and more companies or more stores. And then here back in August, we had their Q2 results. And here they actually didn't perform as well when it comes to revenue. I mean, did it really well anyhow, about 46%, 47% compared year to year. But they still didn't deliver at the numbers that a lot of people hope for. So it flew down again from around $21, $22 to about $16, the magic number there. And then eventually, after more and more good news, as we know, they came up to about $24 and basically gone down more and more again. And it actually got worse now a few days ago, as we know, when they were actually supposed to have their Q3 results. And me, Emmanuel, and the foolish investor, Fahim, we covered that call, or we were going to cover that call. But then we found out that they canceled the whole thing because they weren't ready. So that obviously led to a lot of people who had worried hands, or the shorts taking advantage, selling out, right? So here, year to date, if we compare the three companies, Tattooed Chef so far has done well, but obviously from a stock price, it's still not good. They're down almost 30%. So just shy of Beyond Meat's 31.88%, and they have 28.83% down. Then we have also another all-time favorite, Very My Berry, the very good food company, right? Ticker symbol very.v in the Canadian TSXV. I'm not choosing the NASDAQ version, the VGFC, because it hasn't been trading that long, so we won't get an accurate picture of the actual stock movement, right? So if we take a look at the 52-week range here, at its lowest, it's been down to 1.85 Canadian dollars, and at its top, about $6. Now, this isn't accurate either, because if we actually look at the 52-week range, it's been up to about $9. But it's actually trading now at the TSXV, right? And it used to trade at the CSE, the Canadian Security Exchange. So here it's actually been way higher. So whatever price we're going to see movement that's gone down, it's actually gone down a lot less. So, but let's just make the comparison anyhow from where it started. So when it comes to the TSXV, it started trading there with the ticker symbol very.v back in March, right? Then it was up to maximum around $6. And it's the red line here, right? And then basically it's been a downhill here. Like any other company that's plant-based, it hasn't had an easy time at all this year. Now, granted, this company was extremely overvalued. To begin with, there was a lot of hype surrounding this company, even though it has a lot of interesting things happening to it still. And we know in the beginning of the year, we found out that they had their Vancouver facility. They started opening up the Vancouver facility, especially here around March, April, and then May. And that was great news. But again, then it's been a downhill. And then back in October and September, we started finding out about now when it's down to about $2.7. At its lowest, it was 2.36. We started finding out here that it's going to start trading on the NASDAQ. And as it does on ticker symbol VGFC. And that actually got the stock up again quite a lot to about, I think it was about, 30-40% up here to 3.5 Canadian dollars. And then, as we know, they started diluting the stock again. Because back here, when you see this little V shape here, that's also when they started talking about that they've taken some loans and debt and diluted the stocks. And then here, when it came up to the NASDAQ, doing really well. And I warned you guys that normally that's when shorts take advantage, of course, that it goes up that quickly, without actually the fundamentals changing. People, take an opportunity there to take profit. But also we found out around that time when it entered NASDAQ that they started diluting the shares again. And according to the company then, it's because they need the money, because they're expanding like crazy. As we know, they're opening up their Patterson facility as we speak. So they do probably have a lot of opportunities in the years to come. But that doesn't resonate with most investors because most investors aren't long-term when it really gets down to it, right? So it has been trading down like crazy here. So if we look at the absolute, not to be too harsh, loser when it comes to stock price, that's absolutely the very good food company at 62% minus here. But again, guys, it would probably be more because it was trading higher in, I think, January, February, right? And then when it changed the ticker symbol here, it has been a downhill trend here. But this is not so strange at all because it is a very small company. No pun intended. So if we look at the winner here from as a best performing stock, even though that is weird to say when it's all four of them has actually been crashing down like crazy this year, is Tattooed Chef. They're the winner, right? And they've gone down again about $28% year to date, whilst Beyond Meat is the second in that position, about 31 to 32%. Then we have Oatly, that's over 50%, third place there. And then we have the loser there, the very good food company, with about 62%, and probably more depending on how you look at it. But again, guys, this has been a very special year with the pandemic still going on and the Delta variant getting worse at some points, which actually affects all of these food companies, right? And that they're new companies, growth companies, disruptive companies, so they end up taking the most beating when you compare to value companies. But as I think all of you know, I believe on this channel that all of these companies will probably be doing really well long term, but we're talking about 5 to 10 years. They need time to grow. They need time to stabilize, because most of them, to some extent, if not all of them, have been overvalued or are overvalued still to some extent, even though I believe that most of them, if not all of them, will grow into that valuation and more with time. Now, the question is, who will be the best performer the next 10 years from now? Well, that's going to be interesting to follow, right? And guys, who do you think will be the best performer in 2022? Let us know down in the comments. And which company is your favorite plant-based company? All right, folks, that was it for today. I truly hope you enjoyed this little test, this little trial and error to see if this is something we enjoy doing. I haven't made up my mind yet, but let me know your opinion on that. So if you found some value, make sure to smash that like button. And if you want to be part of this channel, make sure to subscribe and don't forget that bell button. And as always, don't forget that we have a free PlantStock community Discord channel. Take a look down in the description. Thank you, folks. I truly appreciate your help. And don't forget, this was not financial advice. These are just my own thoughts and opinions. It's important to do your own due diligence and invest safe. Hope you have an incredible Sunday. Hope to see you soon, and peace out.